Welcome to Realcast, the weekly roundup of the real asset markets, and this is our special festive edition. And I'm joined by Nicole Dines, Paul Strome, and Dan Innes. Dan, what have you been watching?
We've been following, the Christmas, the run into Christmas, Richard, and there's been no let-up in stories. This is probably regarded as the last full week. Well, it is the last full week before Christmas itself, and we all go on our holidays. But there's been some new information coming out of Derwent London. They just won the right to buy Moorfields Eye Hospital in central London. Its kind of size and location in London makes it one of the most sought-after development opportunities in the city. Neither Derwent or Moorfields Eye Hospital, which of course is an NHS building, who are selling. None of them would confirm how much Derwent had paid for it, but it's rumoured to be about £200 million. But Derwent clearly intends to submit a new planning application for it next year, and that's likely to be a mixed office, retail, hospitality kind of space, given its location. Talking about location, and in the run into Christmas, a lot of the headlines in the real asset of papers and magazines are talking about performance of hospitality and leisure destinations with COVID, and these new variants of COVID are having a bit of an impact on people's Christmas parties. One company that brought out an interesting report was a company called Wireless Social, which looks at footfall data in terms of the numbers of Wi-Fi logins into some of these locations. And unfortunately, it has shown that there's been a bit of a drop-off in hospitality sector footfall after Boris Johnson announced his sort of Plan B announcements earlier in the week. There was this sort of dramatic drop in Wi-Fi logins across the UK. That pattern is pretty much clearest in London, where logins were down 43% compared to the same period last Christmas. Back to kind of more buoyant news, and that's the investment market. And we've seen news last week that Ardent, the UK arm of the US-based real estate investment asset manager, they've added to its growing UK logistics portfolio. And they've made two new mid-box acquisitions. And those properties were acquired in a single transaction from Alliance Property Group for about £11 million. But I mean, that represents a net initial yield of 7%. Ardent's now got a portfolio of 1.7 million square feet of logistics in 14 different locations across the UK after the M7 acquisitions earlier this year. Ardent, of course, they've been investing right across different asset classes. And earlier this year, they bought Touchwood. And that kind of showing now that there is a bit of an improving sentiment back towards UK retail assets. And probably the biggest news this week was the acquisition of Silverburn shopping centre just outside of Glasgow from Hammerson by Henderson Park and Eurofund. And they acquired that for £140 million. And that was a massive, about nearly 20% discount to its December 2020 valuation. And the acquisition was led by Henderson Park. They're the European private equity team. And in that joint venture with Eurofund, who are going to act as Henderson Park's operating partner. But Silverburn's a top 20 UK asset, originally opened in 2007, has about 125 retail and leisure units. So it's worth keeping an eye on what's going to be happening with Henderson Park and Eurofund and what they're going to do up at Silverburn. But yeah, who could say that the retail investment market was perhaps returning to favour?
Well, I echo what Dan was saying about retail definitely becoming more interesting, more deals coming through. In the UK on Friday, the Office of National Statistics released its latest figures for retail sales in November, and they went up 1.4%, which is a lot better than economists expected. It's been obviously helped by Black Friday, but the interesting thing, we've come to think of Black Friday as mainly online thing. In fact, this year it was high street and retail sales mainly, and online sales have been steadily declining in the last few months. And in fact, they were the lowest level now since March 2020, before the pandemic. So that's an interesting development. And that's obviously spurring companies to look at retail again. Amazon Fresh, for example, has opened 3 new stores in London, bringing the total to 15. And it's only in March that it opened the first one. So it's been 15 stores in a few months, which just shows how positive they are about bricks and mortar retail in the UK. And as we mentioned in the previous Realcast, they also opened the general store as well as the grocery store. So they're really firing on all cylinders, as it were. And in another retail news in Madrid this time, LaSalle Investment Management bought a fully let retail park. And again, this shows that high street and retail parks seem to be particularly favored at the moment. And another winner of the pandemic is, as we've said many times, is residential. And Primonial REIM came up with a really interesting report. The title says it all. It is called The Great Acceleration. And it's just saying that while the financial crisis led to a drop in house prices, the pandemic has done the opposite. Has put the emphasis on the importance of having a home. It has emphasized the gap between supply and demand across Europe. So they see a very, very bright future for resi investments across the continent. And finally, Real Asset Media had the last briefing of the 2021 on ESG, particularly looking at the CE market. All the experts on the panel agreed that the sort of Central Eastern Europe has a bit of an edge when it comes to sustainability, because obviously the big development has happened the last few years, which means that most of the buildings are up to scratch. They meet ESG criteria. They've been built with sort of modern construction techniques and so on. And in fact, Adrian Karchevitz of Skanska said that as much as 90% of the buildings are already compliant, which obviously doesn't mean that there's not a lot to be done, because as he himself said, the focus is really shifting now onto the S in ESG, the social aspect, and the health crisis has really pushed ESG to the fore. So all companies, in order to attract talent and employees, have to look at everything, not just the building, but what happens inside the building, air quality, light, entertainment. Michael Nauta of CSM said that, interestingly, the EU, which, as we know, have been very active in taxonomy, in setting down rules for environmental standards, are now looking even at social taxonomy. They're thinking about it. It's very difficult to come up with, because obviously environmental criteria are based on objective science, while social issues are a lot more difficult to define. But it's very interesting they're even thinking about it. And on the fact of how good offices have to be to meet sort of tenants' requirements now. Interestingly, Skanska said that, for example, they only serve organic food in their canteens to their employees. They have space for games and entertainment, and even people coming in to give massages to employees so they don't get too stressed out. And in Colliers, Poland, is only serving vegan food from 2022, not just to keep their employees healthy, but also to have less of an impact on the planet, so to reduce their emissions. And I'm not sure if everyone at Colliers, Poland will be wearing your same jumper as you, Richard, but that's the direction they're traveling in.
Yeah, very interesting. And for Monica, I specifically wore this jumper, and good news potentially there for turkeys, at least for Christmas. Paul, what have you been watching?
Also talking about the residential sector, activity in the build to rent segment has been building to a bit of a crescendo, and among the latest announcements, build to rent housing specialist Greystar Real Estate Partners has formed a strategic partnership with a wholly owned subsidiary of the Abu Dhabi Investment Authority. The partnership's targeting a development pipeline of approximately £1.8 billion in total capitalisation, with equity commitments of up to £750 million between the partners. And they're planning to develop space in London and surrounding commuter towns. It's also just announced that it's acquired the Fizzy Living brand and 30 employees from Metropolitan Thames Valley Housing Association for £400 million. And that'll come under the management of the new venture with Abu Dhabi Investment Authority. Fizzy Living's got a portfolio of 8 assets, nearly 1,000 homes. And a great deal of recent activity in the BTR sector has been in the UK, but in what's said to be the largest commercial real estate transaction in Denmark in 2021, the Minneapolis headquartered alternative investment manager Castlelake has agreed the sale of the residential property company Bostad to AP Pension, which is Denmark's 4th largest commercial pension provider. The price agreed is understood to be 3 billion Danish kroner, which is about 403 million euros. Peter Olsen, CEO of AP Ejendom, the pension provider's property arm, and one of the country's leading property developers, said the acquisition of Bostad and its portfolio is just the first step in the future collaboration. So it looks as if there's more to come from AP.
I saw a couple of small things as well, and there've been discussion around interest rates and inflation at our recent Outlook focused on the French market. And of course, here in the UK, we saw views about inflation heading up towards 6% and the Bank of England raising rates and expectation that there'll be further rates to come. Interestingly as well, I saw DHL putting in an order for 100 autonomous driving trucks, picking up some themes that we've been looking at over the whole year here in terms of transportation and the way that will move. And for those who may not yet yet have the perfect Christmas present, Neil Turner, former head of indirect property investment at Schroders and also former INREV management board member, has written a novel called Pass the Parcel, focused on sex, death and the financial crisis. So if you have yet to purchase that, it's a very good read for Christmas. Thank you, Dan, and thank you, Paul, thank you, Nicole, thank you for joining us. Stay safe, stay well, have a great Christmas, and look forward to seeing you in the new year for our regular roundup of the week in real assets.